We'll do our stock of the day now. I just couldn't resist the temptation of doing Commonwealth Bank. Now I know it's a bit boring. I could have gone with something like a Motive or Data 3, but there's a time and a place for everything. And now that we've got CBA down by about 6%, 5.8 to be exact, in light of its full year cash profit hitting a record $10.25 billion, up 4% on the last financial year. Net profit after tax was supported by lending volume growth, stable underlying net interest margins of 2.08%, and lower loan impairment charges on better economic conditions. The bank says the gains, though, were partly offset by higher operating expenses. They blame that on inflation, the cost of workers, as well as accelerated investment. And we learned today that it has done a deal with OpenAI, so technology modernization remains a priority at the bank, including those Gen AI capabilities. CEO Matt Commons says the bank will maintain a conservative financial setting to ensure CBA is well prepared for a range of economic scenarios. Shareholders will be paid a final dividend of $2.60 per share. That brings the full year dividend to $4.85, up 4% on FY24. So, gentlemen, it kind of feels weird to say buy, hold, sell, but if we had to do so when it comes to CBA, I mean, there's no doubt that that's a solid result, but the question is, where does the growth come from?
That's the problem with CBA. If you look at over the last 10 years, they've actually only grown at about 1%. It's a very stable business. It keeps making money, but very, very slightly. It just keeps incrementally increasing. Of all the banks, I'd say CBA is the best, and if you needed to hold a bank in your portfolio, then that's what to hold. But the prices now and what you're getting is very, very stagnant. It'll just stay there. So you may even be better off in a term deposit than trying to grow your money at 1% annually.
Okay, so hold if that's your thing, but you could look elsewhere for some returns. Do you think that AI could potentially be a game changer when it comes to the old banks, which we know still do have a lot of legacy technology?
It can, and I'm sure it will in the future, but we don't know how it's going to be applied yet. And I don't know if you've seen the research on the Gartner hype cycle, but there's and encourage anyone to Google it and have a look at it, but the Gartner hype cycle shows the onboarding of new technologies like AI and things like that, and the market getting extremely excited about it, seeing that huge wave up, and then it hits its peak and then just crashes back down until you can find a nice stable way to know, okay, this is what we're going to do, this is how we're going to apply the AI. Because right now everything's exploratory. You're just trying to find what you can make, what you can do with it, how you can apply it. But in terms of how much profit, revenue, or addition or cost reduction to the business it's going to add, it's still, let's just wait and see.
All right. So I know before when we've spoken about CBA, Michael, from a technical viewpoint, you can talk fundamentally or technically throughout the program. I'd love a bit of contrast and comparison. You know, you were saying don't stand in front of this moving train. You know, still momentum to the upside. Has today changed anything?
Yeah, look, I mean, we did sell out of our CBA position finally a few weeks ago. You know, we're running a trailing stop. It triggered that. So look, we're out. You know, at some point, you know, the run comes to an end. But you know, as I agree with Sanjee, you know, it's the best bank out there, so that's the one that you target. But I think, you know, to grow from here, it is very incremental. You know, you've got population growth. You can cut costs a bit with AI or whatever else you're going to do. They could compete against the other banks, but yeah, it's not, you know, it's not growing like a Pro Medicus style stock. You know, it's as we saw in today's numbers, you know, what is it, 4 or 5% profit growth. You know, that's all you could really achieve. So yeah, a lot of passive flows into CBA, and I think the reason why those flows were going into CBA, maybe not necessarily BHP and CSL, because CBA it's a bit easier, it's a bit more predictable in terms of where it's going over the next few years with their cash flows. BHP's obviously up and down with commodity prices. CSL's had issues with you know, tariffs and what have you overseas. So yeah, it was a bit more predictable, but yeah, look, the run's come to an end. So this is the chart that I showed on the program when I was last here a couple of weeks ago. That's the blue line's the 50-day moving average. So yeah, we're using that as a trailing stop, and it did show some topping sort of features before it went under that line, and we could see that when it did break under that line a few weeks ago, it tried to get back above it, but it failed, and today it's down. So look, I'd be a seller here. I don't know how low it can go, and yeah, as I mentioned at the beginning of the show, move on to, yeah, we moved on from CBA and got into CSL. We've bought BHP, Pilbara. There's other things that are happening in the market, so I think you can move on from CBA here and look to come back. But when you do come back into the banks, yeah, CBA is the best out of the big four.
So that's a sell.
Yeah, in a roundabout way, it's a sell.
Okay, got it. Thank you. So that was the stock of the day being CBA.